All right, hey everyone, Mark here, Mark P Markets. Thanks for joining me. Hold on, I'm just my microphone. Thanks for joining me for another Bitcoin analysis session. I am simulcasting today on TradingView. That's why I can't share my video because it will probably mess up the connection that I have. So we'll see if how this works. But anyway, I've been having a lot of problems with this TradingView situation because they changed something on their server side. So anyway, I'm going to try this today and see how it works. Anyway, so I want to thank you all for joining me. In this session, we're going to take a nice look at Bitcoin, what's going on, the price action here, and what we can anticipate realistically for the next few days, right? Reward risk levels, that's what we're going to be looking at. Also, we're going to take a quick look at the stock market and gold. If you're new to my stream, please share the market, the stock, or the altcoin that you'd like to see. If it's an altcoin, please put USD or USDT after it so I know the right symbol to check out. All right, so with that all being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, first things first, today is Monday, so I like to check out the economic calendar real quick before we get into the chart. I'm not showing the economic calendar on my screen, but you should definitely check one somewhere and, just double checking the times of news events and things like that. The whole purpose of the economic calendar is to just get an idea of if there are any significant events that are scheduled this week, because that can cause certain types of market behavior going into the report and when the report comes out. The idea is not to trade the report. The idea is to be prepared and manage risk before the report comes out. All right, so let's take a quick look at what we have going on here. So I'm just going to catch up to where we are today. Today is the 20th, right? Okay, so tomorrow, the 21st, we have a Bank of Japan interest rate decision that can affect the yen crosses. This is very particular to Forex, by the way. Okay, their monetary policy statement and their press conference. Again, that's not usually a major market mover, but you want to be aware of it. Now, also tomorrow, we have the Fed interest rate decision for the U.S., okay, the Federal Reserve. They have the FOMC economic projections, the monetary policy statement, and their press conference. This is usually at between 2 p.m. is usually when they come out with the report, the interest rate decision, and at 2:30 they usually hold the press conference. This is Eastern time. This is very important, okay? Now, it's interesting that the market is behaving this way a day before the Fed. I wonder what the smart money knows, okay? You know how politicians are. It's probably not hard. If you have $1 billion, it's probably not hard to buy inside information and to find out what's going to happen before everyone else knows. I'm sure that's going on. Again, I'm just speculating there, right? I have no hard facts about that, but I wouldn't be surprised. Okay, anyway, it's just interesting that the market sells off like this today before the Fed. Now, on the 23rd, so again, about the Fed, going into it tomorrow can be very erratic. Okay, so you can't go into that report with any type of opinions or any type of, I know what the Fed is going to say, or, even when the information comes out and you process it, using logic through your mind, and then the market can do something completely irrational. So don't get caught up in that logic argument. There's no room for logic in a random environment. All right, so the best thing to do is to let the report come out, let the market figure it out, and then go from there. This is especially important for day traders, okay? Now, on the 23rd, we have Germany, market PMI composite. Okay, that's usually not a big mover. On the 23rd, we have Switzerland, Swiss National Bank monetary policy assessment. They have their rate decision. So I guess it's rate decision week. All right, so important for the franc, if you're in any franc crosses. Then we have on the 23rd, the European market PMI composite. These aren't usually big market movers. On the 23rd, we have for the British pound, they have an asset purchase facility, monetary policy summary, vote rate hike, England minutes, Bank of England minutes, MPC vote rate cut. There's all kinds of stuff going on there. all right, with that. So, again, just want to be aware of it. The pound is getting hammered, by the way, in advance of this news. So just something to be aware of. And then also on the 23rd, we have Canadian retail sales. So that's what all, Wednesday? And that's what I'm showing for the week. I'm not seeing anything else here, unless, am I missing something? I'm not seeing anything else here for the week, okay? That's the 23rd. So that's pretty heavy as far as economic reports, because we have these interest rate decisions. So just be aware of these things. All right, by the way, TradingView people, I see I have a couple of people watching. If you're watching, please share your questions in the chat now, because often I get a lot of questions and I'm not able to answer them all. So the sooner you could put a question in the chat, the better. Also, one symbol per person. Don't put like 5 symbols in one question. I'm only going to answer one of them so that I can give the opportunity for other people or other questions to be answered. Bart Guy sent me 100 coins. Thank you so much. MSTR skipped the stop loss, okay, with a big gap. All right, what to do in this scenario? All right, good question, Bart Guy. Definitely going to get to that. And thank you again for the 100 coins. This guy sends me coins when I'm not even on TradingView. So thank you so much. All right. So let's get into the analysis now with Bitcoin and all that other stuff. I want to cover Bitcoin quickly, along with the stock market and gold, and I want to get to your questions. All right, now, first things first, Bitcoin. So anyone that read my TradingView article yesterday, anyone that read that, what did I say in the article? I don't even know how many views I got in that article, but it probably wasn't very popular. The thing is, I said, wait for the market to make the first move, right? Because the other day, right, between Friday and Saturday, it gave us a buy signal. We didn't send anything out. I was not going to send a buy signal out into a resistance. I refused to do it. But that's a buy signal, okay? It was followed by a sell signal. I described the sell signal in my article yesterday on TradingView. I said if it took out the inside bar low, the inside bar had to close. If it took out the low, we'd have a new sell signal. But the thing is, would it follow through? There's no way to know. I don't know if it's going to follow through. No one knows. All right? So I did mention that this is in the middle of a congestion area, right? And now we have an established lower high. This area is a lower high. Not good for longs, okay, for swing trade longs. You should not see a lower high. So we can argue head and shoulders, blah, blah, blah. You're going to see all the fake gurus with all their gimmicks coming out on this, and they were right, and blah, blah, blah. But here's all I'm looking for now. We are now at interesting support levels. I've been talking about 44K forever. I've been talking about 41K forever. We are now at 43, what is that? 43,204. Okay, so now we are at levels of interest. Okay, this area right here. That is a support area. I'm interested for longs, but not in front of a candle that looks like this and a lower high. So in this situation, what do I have to do? I'm going to have to wait for some sort of price action that proves that this thing is going to hold around that between 43K and 41K, because we're below 44K, and that was a support. The reason why I was not calling buy signals, because I had some people ask me, why aren't you calling any signals? For one, I don't like the market environment, right? And same with the stocks. I've been staying away from that for like a month because I have not liked that stock market situation. And here we are now, right? But when this thing was giving buy signals, the problem with the signals were they were basically the trades, the entry prices were right back into that resistance zone between that 47 and 50K. I'm not interested in buying at those levels. If I'm going to buy, on that type of thing, I need to see it clear 50K and then give me a continuation pattern. It tried to do that, but it failed. Okay, fine. So in this situation, we're at better levels. Not a place to step in front of unless you're a position trader or an investor. Lower prices are always better. Keep in mind, inventory is not about levels. Really, inventory is not about prices. Inventory is about size, right? So here we are with prices. So as far as swing trade goes, I like the location. So one criteria is met, location. But I have no price action to support me here. Some people are going to step in front of this because they think they know better, right? But there's no way to know if this momentum is going to follow through and go lower or not. We have a lower high, so theoretically, this thing should go lower based on this structure, right? So in order for me to go long, I need to see a double bottom develop or possibly a failed low. If we get the failed low over the next few days in the form of a bullish pin bar in this area right here, I would be open to that. It would be aggressive, but my premise would be actually based on this price area right here. Here, let me draw a box on that. It would be based on this area here, because basically if the market can't go much lower than that, then it's probably going to lure lots of shorts, right, and squeeze them out, and this whole consolidation thing can just basically become a higher low at that point. But it's too early to make that judgment. So that's a potential scenario to watch over the next few days. Now, more ideal than a bullish pin bar, more ideal would be a little bullish attempt, maybe a couple of green candles, right, followed by another pullback that can't go lower. That would be a double bottom, a little mini double bottom. Kind of like what we had back here, all right? Kind of like this stuff back here. But I hope that the candles could be narrow enough or give me a buy signal at a level that makes a lot more sense than 47K. I'm not buying it if it's back at 47K, okay? I'm just going to have a hard time buying that. So those are the scenarios I want to see. Something like this can take a week to develop. So you have to be very patient. People don't like patience. I understand. Patience is hard. It's very hard to have that, especially when you have to sit in front of something that looks like it's going to move one way forever, right? A month ago, everyone was throwing a party, right? People were asking me, why aren't we buying? Why aren't we buying? Why aren't we buying? And then this thing came out of nowhere, right? So patience. So here we are, better levels. We'll see if we can get a reversal. Now, like I always tell people with these altcoins, I see a bunch of altcoin questions. Use Bitcoin as your guide. I warned everyone about these garbage altcoins. And I said, if Bitcoin breaks its supports, go back and watch my videos. Watch Thursday's video. Watch the previous Monday video. Watch what I said in those videos. If Bitcoin breaks the supports, those altcoins are going nowhere. They're going to break their supports too. That's why you can't step in front, and that's why you can't rely on those charts alone. You really need Bitcoin for confirmation because it is still the leader no matter what anyone says. Price continues to prove that idea. I don't care. I don't listen to people. Okay? I see so many videos of people just proliferating nonsense, and what they're doing is they're appealing to emotions. Right? They're getting people excited. They're giving people hope. Hope is not a strategy at all. You lose a lot of money with hope. Trust me, I know, because I've been there, right? So anyway, so stay away from these things until there's stability. And until stability develops in Bitcoin, the space is, you just have to, step away from it and wait if you're thinking swing trade. If you're thinking investment, well, here's another place to take an allotment, right? Whatever your target allotment is, you have now a lower price, right? A slightly lower price to take another small bite. That's the best you can do here. What if this thing goes to 20K, right? Now you're going to have a lot of people predicting, oh, it's going to 20K now. Oh, it's going to 15K. Oh, it's a bear market. Blah, 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 blah. It's all nonsense. Don't pay attention to it. Support is 41K. If 41K is cleared, you're looking at 37K. That's it. Okay, if 37 is cleared, you're looking at 35K. And we'll see at some point if Bitcoin can find stability or not, right? And until it does, the best thing to do is just to step aside. All right, let's talk about the stock market. All right, and I'm going to get to your questions. I'm going to talk about gold real quick too. But now look at this mess. Here's what I want you to think about with this, right? What is this minus today? 456 points, okay? Now, think back. Let's go back to August, right? August. New highs after new highs after new highs, all-time highs every single day. Do you remember those days? Do you remember what the experts were saying? If you watch any mainstream news, what were they saying? Oh, the stock market's great, it's doing all-time highs, blah, blah, blah. If these people knew anything, all right, why wouldn't they say, I don't know, it's very risky at these levels? If you go back to my videos, now again, I'm not trying to toot my own horn or anything here, but what was I saying? I wasn't calling for a short because it's very hard to short something like this because the market can keep going, right? There were plenty of sell signals along the way that failed, right? So you can't just step in front of it and call a short. But what was I saying? What I was saying was, if I wasn't willing to buy at 14K, the 14K breakout and the 15K breakout, I certainly was not willing to buy at 15.5, 15.6, or 15.7. I said that quite a few times, okay? While people, hey, the stock market's going up forever. Let's take a look here. What maybe some, I don't care what the news is saying right now. This was setting up for a while. Look at Apple. How many people, oh, I use Apple, so, you know, I mean, it's a good stock. Yeah, it's a good stock. But why wasn't anyone calling for Apple going from 157, the 157 high? Where is this thing right now? 141? Who 2 weeks ago would have called something like that? No one, right? So this game is about risk, not predictability. Now this thing is getting hammered. We have a gap inside of here, right? This is what's leading the NASDAQ. It always has been leading the NASDAQ. The problem with the broader markets is they're basically a reflection of just a couple of stocks. Facebook. Look at Facebook. Oh, getting hammered today. What a surprise. Google. Oh, a gap in Google. Come on, these stocks are invincible. They make money forever. I don't understand. They have such good fundamentals. Means nothing, all right, especially on the short term. So all of this weakness. What's another one? Netflix, NFLX. Let's take a look. No, lower high, bearish candle, big surprise. So we're getting the sell-off. All the people that got sucked in to all of this nonsense over here are now getting pushed out. Okay, so what do you do now? Well, let's take a look at the S&P. Look at this. I mean, these things are getting hammered. It's nice to see because this is reality. All right, I'm not a bear. It's just reality. And we are now at much more attractive support levels. But you can't just step in front of this, as you can see. We had a support level here at what, 44.5? 44.20. Blew right through it like it wasn't even there today. Interesting. Some people step in front of that. Someone mentioned in the chat room, why are the people, you know, are all the people that have been buying all along, why are they conservative now? Why are they not buying? I think the retail traders that have been buying these pullbacks because that was the obvious thing to do, I think they all got caught, okay? There's a situation going on here. All right, now again, I don't care what's going on in the news. I don't care what's going on in the world. This was setting up. There's now a lower high established, okay? Lower high right here. What is that? 44.88? So that lower high sets a new tone, and here we are pushing the lows, which means I'm not going to step in front of this as far as longs go. I want to see some type of clear reversal. If you notice over previous months, right, this is the whole summer here, I mean, whenever it made a lower high, that lower high was followed by a higher low, okay? So far, there's no higher low. So we have to see how that goes. But my point is this, don't get sucked into conventional wisdom. Don't step in front of this. This could be a buying opportunity, but it might still be a little early. I prefer to sacrifice the best price, which is a very expensive game to play, trying to catch the best price, and wait for stability to develop, okay? And that may take a week or two. Now keep something in mind, thinking ahead, because the whole idea of a market timer, if you want to be effective, is you have to think ahead, not behind. All this gimmicks and all this nonsense that all these other fake gurus push on you are oscillators, right? Oh, look at this chart pattern. Look at this oscillator. Look at this thing on this oscillator. Look, I have two oscillators, right? Again, they're all focused on what is behind because, you know, whatever. Maybe it's a gimmick that works and it generates sales for whatever products that they're selling or, you know, whatever, right? You know how that goes. My point is you have to look ahead. Now let's think about this for a minute. What do we have over the next few months? Holidays, okay? Consumer holidays. So this could be the pullback going into the next Santa rally, possibly. Now, historically, we always get that optimism after October, right? There's a bottom. Once this bottoms, this could turn into the Santa rally going into, you know, December, blah, 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 right? That's the typical pattern. But at this moment, you can't step in front of this thinking, oh, yeah, okay, cool, that's probably going to happen. You can't do that because it may not happen. So we have to watch the support levels, which we're basically fooling around in a nice, attractive area. Now we have to see what kind of stability we get, okay? But why I require more confirmation now, because look before, let me just point this out. I know I'm talking a lot, but But I still have to talk about gold. But look before. When the market was in this nice, distinct uptrend, bullish, right? Bullish, higher lows. These higher lows, look at the kind of candles that were developing there. Look at this pin bar right here, right? Beautiful, okay? That kind of stuff. If that develops now, that's not the configuration that we have as far as the structure. This is a nice bullish structure. Right now we have the beginnings of a bearish structure, the lower high. So before I get involved, I want to see something that shows that the structure is changing back to bullish. And that's not going to be one single pin bar, all right? It usually takes some time. So keep that in mind. It may take a couple of weeks. So in this situation, if you're an investor, never bad to buy into lower prices as an investor as long as you're keeping your size controlled and within the boundaries of your overall, investment goal. Like meaning if you have $10,000 to invest and you're investing $500 at a time, this may offer an opportunity to invest one of your $500 allotments, right? Whether it's into a stock, the index, whatever, right? That's inventory thinking. And this is the S&P. It's not going to zero. So if you're averaging into the S&P, that's not a horrible thing. But keep in mind, the S&P can give back another, 5 or 10% possibly over the next month. So you have to keep that in mind. When you're dealing with the S&P and the NASDAQ, you're basically looking at FANG, right? Apple, Google, they're not bad companies, but this type of situation, this is a cycle, it occurs. It's just, it took a little while to get here. It took like 6 months, but here it is. So my point is, let this thing, if you're looking for shorter term trades, like swing trades, especially in the stock market, it's too early, right? So I would wait that out, especially for highly correlated market stocks, which is why I've been staying away from them since the beginning of August for this reason. And look how long it took to play out. Have I missed out? Yes, I missed out on some of this action here, right? I certainly missed out, but I'm not stuck in this. So how many people made some money in this? Oh yeah, I'm so good, I made some money. And now they're giving it all back, plus more most likely, especially when they go into hope mode, because that's what they've been using all along. And hope mode will eventually catch up to you. All right, so real quick. Oh, I got some more coins here. TradingView sent me 100 coins. Wow. TradingView, the company. They must like me a little bit or something. Thank you, TradingView. 100 coins. I mean, with the amount of money that you guys make, maybe you could send, I'm just joking. I was going to say, maybe you could send me like 1,000 coins. I'm joking, though. I'm joking. Okay, and Gmail. Hey, Gmail, good to see you. Sent me 100 coins. Thank you. Thank you very much. Hey, TradingView, by the way, if you're watching, I've been having a very hard time streaming on your platform. I managed to get it together today, but my software doesn't work with your platform anymore. So, and I sent something about it, and you know what they told me? Oh, go use this other one instead. But it doesn't work very well with my system. So I don't know, if you could look into it further, whatever, I'd appreciate that. It'd be easier for me, but I know I'm not the only guy on your platform, so I understand if you can't do it. But anyway, just wanted to mention it since you're watching, and thanks for the 100 coins. I really appreciate that. Okay, so that's S&P. Now, real quick, while I'm on the S&P, and I see all your questions, and I'm going to get to them, so I'm not ignoring them. I just have to go through my analysis first, and I'm going to get to your questions, okay? So thank you for sharing them. Let me take a look at the bond market real quick. This is very important. Now, the bond market, this is the 10-year note. XB Taylor, I always enjoy your ideas. Oh, 200 coins. Thank you. I appreciate that. Thank you so much. Okay, I'm going to just turn these off. Thank you very much for the coins. Okay, because I don't have any requests. But I'm going to keep Bart Guy on here because he's got a request on there. So thank you. Bond market. I've been bringing up the bond market. I talk about it every week. Okay, now here's the thing. Weekly chart, bond market. Let's take a look at the 10-year note. So the bonds are strong today. That's unusual, right? The bonds have been sort of weak. And usually with rising rates, we should see this type of stock market action. So obviously we can't blame the bond market for this. The dollar is going lower at the moment based on that, or interest rates, implied rates are going lower. What I mean by that is, this is a reflection of interest rates. If bond prices are going to continue higher, that means we're going into a lower rate environment, right? But this little candle doesn't really mean much in the eyes of the bigger picture, so we have to see. But here's the thing. So I always take a look at that, and this is conflicting information. What about the dollar index? Look at the dollar index, right? Now, my theory has been if the dollar continues higher thanks to rising rates, if that's what we get, and tomorrow the Fed may set the tone, right? They may say something in their language, and maybe that's what the smart money is reacting to right now, or maybe they know something. I don't know. But here's the thing, right? The dollar has been trying to break out. There's a higher low on the dollar index. This is the weekly chart. And if this thing breaks to that new high, that's possible that the Fed announcement tomorrow can act as such a catalyst. If the dollar breaks out, that's most likely going to put bearish pressure on everything else. Now, so this is the weekly chart. If we look at the daily chart, there's really not much going on here, right? It looks like a bearish pin bar and blah, blah, blah. Okay, at a possible resistance level on the dollar. But we're going into the Fed. So the Fed, like I said, was it tomorrow or Wednesday? Whatever. I forget the date. I think it's usually on Wednesdays, but I think whatever the calendar said. Actually, let me just pull up that calendar real quick. When was the Fed? The Fed is on the 22nd. Okay, so that's Wednesday. Yeah, okay. So again, the Fed can set the tone for such a breakout, right? And if that's the case, you'll see further pressure. It's likely to see further pressure across the board. What can the Fed do to make the dollar stronger? They can say something about what they're going to do with interest rates, something about tapering, something about reducing the stimulus that they've been pumping into these markets forever, that type of stuff. They're changing their schedule to rate hikes sooner, whatever the language is. All right, you don't have to try to figure it out. Let the market figure it out. But that's what they're going to be watching for. My point is, if this thing breaks out, that's going to be a sign of rising rates, and same with the bond market. And that could be what the market is reacting to slightly earlier here, why we're seeing such an exaggerated move. I'm sure there's another catalyst that set this off. I don't even know what it is. I don't care. Okay, so that's the general market. Now, let's talk about, since I'm on the dollar, let's talk about gold real quick. Look at gold. Often gold is a defensive type of play, right? Usually anti-inflationary, blah, blah, blah. Lots of opinions on gold, whatever. Don't trade on opinions. You have a resistance right here, and that's where it's been reacting to. So I'm not very interested in buying gold at that level. Gold is not in a trend, it's in a consolidation, and it has been for a long time. All right, what I like to call the wave 4 consolidation, from Elliott wave, and I believe Bitcoin is in a similar situation, on the bigger picture. And in wave 4s, fake outs and false breakouts and a lot of erratic movement is very common, or lack of a trend, right? So here we are, 1834 area is resistance. We've been fooling around near these supports. You have a support right where it is now. Okay, 1750 area, it's a range support. The market has been dramatically lower, but not for very long, right? So this is not a bad area to consider for gold. The thing is, it's a tough spot because, it has been lower, right? But it is a support. So here's the thing. If you're looking to play the range, which is what you have here, a potential range support proven by these prices previously, you have an outside bar today, which is a start. Now, what is the risk if you take gold long? What is the risk? You have the high here, what is it? 1767 is the high. So you can argue there's a buy signal in play. Look at the low of this candle. 1742. So you're looking at what, 25 points at minimum if you buy gold now, and you're anticipating that the support will hold, because this is not exactly an ideal setup, but it is a support, and you do have an outside bar, and you have a few things going for you, right? If the dollar fails from here, which the dollar is at a resistance, this has potential to pop. But that's, again, it's like a 50-50 thing. It's going to depend on the Fed. But this is an attractive level, so you get my point. What's more important here is the risk. So if you're willing to risk 30 points on gold, you may be able to get at least 30 points, because the next resistance here is around the 1790s, 1800, right? So if you're buying this thing at 1770, and you're getting out of it around 18 something like that, or maybe slightly higher, then the reward risk can be, it's possible to see a reward risk of greater than 2 to 1, right? You at least want to make 1 to 1, at minimum 1 to 1. If you can't do that, then it's not worthwhile at all. But from this level, I think it's within reason to get better than 1 to 1, possibly 2 to 1 if it can get back to this resistance. So there is some interest there, right? And I do like the way the candles are developing, and there is no trend here, right? Which, or gives some additional possibility. Because if there was a clear bearish trend, I would want to stay away from, a long signal like this. You can argue, oh, there's a lower high. Yeah, but gold has not been in a trend for some time. Okay, so sometimes it's confusing to make those determinations, but it comes with experience. I mean, I've been doing this a really long time, so I recognize what the possibilities are. I also recognize the risk, and that's the first thing that I focus on, right? 30 points of risk is about standard for gold for a swing trade, so that's not bad. I'd be willing to take a chance there on something like that. It's slightly more aggressive than usual, but there you go. So that's the gold situation. It's going to be very dependent on the Fed. So I'm basically, if I take such a trade, I'm betting that the Fed is going to say something dollar bearish. Okay? If they say something dollar bullish, this thing's going to get hammered. And you're probably going to get right to the stop very quickly on something like gold. They can do 30 points in a day very easily. Okay? So just a couple of things to point out. All right. So let me get to your questions. Man, I've been talking way too long, but there's been a lot to talk about. And I have TradingView here today, so it's nice. All right, so let me get to your questions. Let me start with this chat over here, XX. All right, Cardano, USDT. And by the way, if you want to share what country you're from or what city you're from or whatever, it's always a nice thing, especially on TradingView. It's always interesting for me to see. I'm broadcasting from the greater New York City area, in case you can't tell from my accent. All right, so let's begin here with Cardano, ADA, USDT. Like I said before, these things are going to get hammered because Bitcoin is getting hammered, right? So Cardano, we've talked about this too on previous streams. If you watch them, look where you are on Cardano. So I warned about the break. What was this level here? The 2.25, this area, 230, 2.25. I warned about that break, right? If Bitcoin broke. And look, so Bitcoin broke, and here we are at the next support, which is around $2. So great level, but you're dealing with bearish momentum now, all right? I wouldn't call this a bear market just yet, but it's bearish momentum. The structure is bearish. You have a lower high, and you don't have a lower low yet. You may have a double bottom, but it's too early. So you have, one of the criteria is met. You have a level, support, but you need stability. Just like Bitcoin, need stability. So on something like this, again, if you're an investor and you're trying to average into Cardano, well, this would be a nice opportunity to get a much better price than it's been for a while, right? Again, that is not a levels game, it's a size game. So you have to make sure you size appropriately. You don't want to step in with 50% of your allotment at such a level. This thing can go a lot lower, right? If this momentum stays intact, which anything is possible. So as far as new longs for a swing trade, certainly would like to see some sort of reversal candle develop here over the next few days. Whatever that could be. That could be an inside bar, that could be a pin bar followed by an inside bar. It could be a combination of things. The thing is, I want to see something that says that it's not going to break lower. I want to see something that says it's going to reverse. And Bitcoin needs to be showing the same thing. Maybe we get an inside bar, or I'm sorry, a pin bar that goes lower, right? Sucks in all the shorts, bangs out a bunch of longs, and then reverses right there. That would be a failed low if it produced such an outcome. And I would be expecting something similar out of Bitcoin. So use Bitcoin as your guide. Don't step in front of this. You're going to sacrifice the best price. What if this is the lowest price, over the next few weeks? It's possible. But the thing is, playing that game is gambling, because what if price goes a lot lower, right? So you can't play that, I'm trying to get the best price game. Let everyone else figure it out, meaning let the market stabilize, and then measure your risk from there. That's what I'm looking to do with Bitcoin. And this thing's a follower. It's not a leader, right? It gets a little out of hand sometimes because of all the massive amounts of hype that are everywhere about these things, which you need to ignore. I can't emphasize that enough. Focus on your chart. Focus on the price action. That's the closest thing to reality that we can get as a retail trader. There's so much noise and so much nonsense out there. That's what confuses people. All right. A lot of the answers are right in front of you. You're just there's just too much information in front of you, and it distracts you from the value of what the chart can tell you. All right. So that's Cardano. Slovakia. All right, Peter. DOT. All right. So let's go over DOT real quick. DOT USDT. All right. So again, these were starting to get a little out of hand over here, right? They were breaking out. I warned about that breakout. If you watch my previous streams, I warned about it because when you buy those breakouts, when it turns on you quickly, like it has here, that's when you have to make a decision, right? A breakout should continue with green candles, not produce red candles or inside bars or pin bars. That's not what a breakout should do, right? That's not momentum going your way. So anyway, now Bitcoin breaks, no surprise, and we get a big red candle. No problem. So the question is what to do now. So like I keep saying, use Bitcoin as your guide, but let's look at this chart as far as levels go. You have a support right here. It goes back to this old resistance, which is 29.35. So you could round that to 29.25, right? 29.35 area. So again, point of interest. Good. That's a good area to be looking for longs. But there's just no reason to go long right now. So what you want to see, it could turn into a higher low, which, a higher low in this configuration. I mean, look at that. Higher low should lead to a higher high, right? If Bitcoin can agree with you. So again, just like the other coins and just like Bitcoin, I'd be looking for some sort of stability here in this area, some sort of reversal. Now keep in mind, if Bitcoin breaks 41K, doesn't matter how many reversals you get over here, it's going to break lower too. So like I said, use Bitcoin as your guide. So to summarize this, it's too early to do anything here as far as swing trades go. But I definitely keep an eye on it since it has it's been a generally strong chart, right, in recent time anyway. But something also I want to mention, and this goes for all the altcoins. If these major supports break, like in this case, 23.45, which is likely to coincide with like probably a 37K on Bitcoin or something like that. If this breaks, then that may be signaling a broader structure, meaning the party may be over for a while. I'm not calling for a bear market, but what I'm saying is they may be out of play because they should not break those supports if they're going to remain strong. That's an important sign to keep an eye out for, right? Which means it can help you by don't keep putting on trades, don't keep pouring more money in there if the market gives you such a warning. Let the market stabilize and let it produce positive signs, not negative ones, all right? If you're looking to average into these things or whatever. Also, I have to mention with these altcoins, don't get too comfortable with these, okay? They're high-risk instruments. Don't think that just because it's Cardano, and everyone has some, it's a safe coin. There are no safe coins. There's no safety in this market. If you go around the internet and you Google this whole Tether situation, I've mentioned it before, there's a lot of risk that's built into this market. There's a lot of risk. And if that whole Tether situation gets out of hand, just Google it and you'll see what I'm talking about. It can have a very negative effect. Not just initially, meaning you can watch Bitcoin, evaporate 10,000 points in a matter of hours. That can happen. But more importantly, for the longer term, it's going to hurt confidence, which means you may not see these things, money flowing back into these things for a while. So you have to watch out for that. Again, I'm not trying to instill fear, but you need to understand risks that are not apparent on your chart, right? A chart can't tell us about all the risks. If Bitfinex and their situation gets out of control, that's a risk that you need to be just aware of, and it can just come out of anywhere, right? Just to remind people, back in 2008, the housing situation, bad loans. People had known about those bad loans for 2 years, 3 years. There were plenty of people reporting about the bad loans. A lot of people couldn't understand why the market kept making higher highs and higher highs in the face of all this negative information. And then one day, a big bank goes out of business. Lehman Brothers, Bear Stearns, whatever. They go out of business, and that caught everyone's attention. And then they realized, oh, look at all these bad loans, right? And then the market reacted. So that reminds me of that time, this situation. Anyway, all right, enough of that. So I have a lot of questions to answer here. Let me get to more questions. Let me go to TradingView here. Okay, KGP. Hi, which one weigh more? BTC higher low in broader time frame or lower high on smaller time frame? Good question. So the larger time frames always carry more weight, right? So going back to BTC, that's why I'm always focused on daily charts. Look, we can argue that right now this is a higher low. We can make that argument, right, on something like Bitcoin. The thing is, yes, it's a higher low, but the candle for one isn't closed, and we need to see some sort of reversal. We need confirmation in this area. Otherwise, we have a lower high which is established on the larger time frame. The higher low is temporary for the moment, right? Because the candle is still open, and there's nothing that negates this lower high. So at this moment, I have to go with the lower high, and say that that's in effect until it's no longer in effect. Meaning, I need to see stability. I need to see a double bottom. I need to see something that says that the lower high is canceled, and right now it's not. So I'm not. Again, you have to understand, I'm not calling for a bear market, but I do recognize the bearish momentum, and I'm not stepping in front of that. All right. So thanks. Good question. What's your point of view? Need to fill a gap on your wish. I'm not sure what you mean, brother. I'm sorry, Trother. I can't read my eyes. I'm not sure what your question is. Maybe you can ask that again. Okay, aloha from Honolulu. Nice. Holland must be nice over there. Would you please check Twitter? Mahalo. Okay. TWTR. Twitter. Let's take a look. So look, Twitter is probably, I'm going to guess, I don't trade this stock, but I'm going to guess it's probably going to follow the FANG group, especially because Facebook is part of the FANG, right? Now, look at the situation. Let's just look at the structure. So I'm going to say that it's generally correlated to the stock market. What's this thing minus today? $1.81, so it's minus 2.9% or whatever. All right. So this bearish structure obviously is nothing new. We have a lower high here, right? The recent bearish structure. Now, recent general trend though, right? This is a bullish structure, which is much larger. So we can argue that this thing is just possibly going to stabilize and you'll have a broad higher low, which would be a bullish sign if it can follow through, right? So it's too early to do anything, and I'm sure a lot of stocks are going to show a similar configuration. What you want to see on something like Twitter is you want to see a double bottom develop around this price, 58.45, somewhere around there. Price should test that level, right, or something like that, and then produce some sort of reversal candle, whether it's a bullish pin bar, an inside bar, something. That would be an ideal sign. But also, what would be also helpful in that situation is a similar reversal in the S&P, right, or the Nasdaq, because obviously this is a Nasdaq stock. So you want to see something like that develop in the broader index before getting involved in something like this, all right? But it certainly could be a buying prospect if it can produce the reversal. I'm not a big fan of Twitter. I mean, how far can this thing go? If you're getting in around 58s, whatever, you're risking maybe $1, $1.50, something like that. Can this thing run $1.50? Yeah, it could run that reasonably over a week or two period. So I would say the potential is there for a short-term swing trade. It's just too early, okay? And again, you don't want to step in front of a market like the Nasdaq that can still continue much lower, because like I said, the Nasdaq is a reflection of Apple, and Apple can, the whole FANG complex, and when they seriously correct, which they have not done for a very long time, they can have a stronger effect on the market, which has yet to play out, right? So that's why you don't want to be too early with these things. All right, so good question. Let me see what else we got here. Hello from Netherlands. Netherlands? Okay, thanks for joining. Matt, okay, Matt, hey, hi, good to see you. Slovenia, hey, welcome. All right, TradingView, thanks for the live stream on such a day. Okay, yeah, that's with TradingView. Okay, cool. Yeah, and thanks TradingView for taking time to stop by and say hi. I know you guys are busy. Gmail, okay, from the Bay Area, NVTA. Okay, and so hold on. Someone gave me a bunch of coins earlier. I can't forget Bart Guy. All right, so hold on. So Gmail, I'll do your thing here, and then I'm going to do Bart Guy. I can't forget about this guy. First thing he does is gets in here and gives me coins. All right, so, Invitae, biotech stock, right? Haven't heard from this one in a while. Now, what's nice about these stocks is they're not highly correlated to the S&P. So often when you see a chart pattern or something, you can rely on it a little bit more because it's a reflection of the the order flow in the stock itself reacting to whatever catalyst is driving the stock rather than being affected by the stock market as a whole. So let's talk about this. Let's zoom out a bit, right, and see what's been going on here. We've had some trades in this. You can see an old trade on my chart there. So as far as levels go, this thing is, we can argue that it's in a consolidation, right? And your range low is basically right there. What price is that? That's 26.36. Okay. Right now this thing's fooling around 30.68, so it's not too far off that low. and you have a potential higher low that's in play, right? Over, what was it, Friday, Thursday, whatever that was, and you established that on that day. So on something like this would be a classic breakout play. I mean, you're in the face of a pretty bearish market, and this thing is this thing up today? No, this thing is minus 91 cents. Okay, it's just not showing a red candle. But you do have this bullish configuration. So in this situation, at this moment, you could measure risk from 28.89. So you could say basically 28.50, about $2 from where it is now, right? If you were to get involved in something like this, but it hasn't broken out. You'd have to take the breakout, which is 32.54, which actually puts your risk at about $4, right? So if this thing can keep that going, what's the next resistance here? This July high, 35.51. If you're buying this thing at, what was that, 30, what did I say, 32, about $32, that's only about $3, something like that, right? So potential $3 at the first resistance, but you have to risk 4. That's not very attractive right now. So I would consider that very aggressive. Perhaps it breaks that resistance, but you're going to have to be hopeful. Keep in mind, there's no way to measure the probability of, will it break the resistance or not? I mean, it's 50-50, right? And you just basically, if you're in that situation, it either works out for you or it doesn't. The only thing we can control is the risk. So based on this situation, the way it is right now, I would wait for something like this to give me a slightly better price. Maybe you can get a retest of 28.89 area and give you a little mini double bottom. That would be ideal. Maybe it goes slightly lower, okay, into a more attractive area and gives you a reversal. Keep in mind, there's no trend here. This is a consolidation. So in these situations, the best thing to do, because again, we're fooling around with a lot of random price action here. Best thing to do is wait for the range low. That would be ideal if it can get back there, and you're looking at the 24s, 25s. That would be, if you can wait a few weeks and it goes there, that would be the best place to look for one, for a move higher off of the range low if it can give you a buy signal there. So that would be the more conservative thing to do, okay, if you're not going for the breakout or for the double bottom, possibilities. All right, so thank you for asking about NVTA. All right, where's Bart Guy? Okay, so Bart Guy asking about Mr. Okay, so MSTR. I remember he asked about this the other day, right? MSTR. And it was a possible long. We were talking about that. But remember what I said? I said if the market breaks, right? I mean, this thing can get hammered. Well, here you go. So now it skipped the stop. Right? Now that's another risk that you have to take with these things, like a gap lower, like Apple and the rest of them, right? So what do you do in these situations? Well, for one, if you're in it and it gapped over your stop and you're still in it, well, the thing is, for one, you have to cut the risk, right? Because it's beyond the risk you are willing to take. So one thing you can do, if you don't want to blow the whole thing out, because you may think, oh, but I'm going to blow it out at the bottom of the market, right? That's possible too. So one thing you can do is first look at the levels, right? Look at where this thing can find support. These are the levels, right, where this thing could find support over the next week, possible week. What if the Fed comes out with something that the market likes on Wednesday, right? And the market turns around. They banged me out. I banged it out all at the bottom. So my point is this. This is what you can do. Reduce the position. Take a partial loss, right? That's a safer thing to do. I don't like to use that word safe, but at least it gives you the possibility of not, of catching the turn and at least getting back some of that money, right? You certainly don't want to add to it. That's why I say reduce the risk, take a partial loss. Again, I can't give trading advice, but that's what I would do in a situation like this. And then see if you get the reversal. If you don't get the reversal and it just keeps going, well, now you're going to be losing, but obviously less than you would with the full position, right? And at some point, like if tomorrow, you take out today's low tomorrow, tomorrow is 568 is today's low. Like, I mean, at some point you have to cut the risk. The best thing usually to do is take the loss as quickly as possible. And if it turns, get back in. That's probably the best thing to do, but it can be very frustrating. So you have to decide, in terms of your risk tolerance and how much more you want to risk on something like that. But, you know, at least reduce the risk, if anything. Okay, or if you're just totally uncomfortable, like I said, you blow it out and you look to get back in because it can reverse. Look at this gap, right? This gap from, what was that, back in July or whatever? Gaps often act as support or resistance levels. In this case, support, and you're right in the middle of it. So, you know, again, this is going to depend a lot on the stock market. And the stock market, while as ugly as it looks, it's in a position to bounce, right? It's in the position, just early. Look at the tail. Is this thing closed yet? This is going to, Nasdaq's going to close in just a few minutes. And what? It just made back 150 points or whatever. It was -4 something earlier. It's -291 now. So you see, buying is starting to come in. You can't trade on that, right? Not on a swing trade because something can come out overnight and next thing you know, this thing's 100 points lower tomorrow. But there is some buying that's coming in. So we can't ignore that either. Off of an old resistance area. Actually, it's inside the congestion area. Look at this, right? Notice, it's right in the middle, basically, of this congestion area. That makes sense. So that's why I would venture to say, on something like MSTR, you know, just take a partial loss and then see if this thing turns, all right, over the next day. That's the best thing I could tell you. All right, so those are your choices. Take a partial loss, take the full loss, and be prepared to get back in, you know, and don't add to it, all right? Again, I can't give you trading advice, so I hope that helps. Thank you for asking, and thank you for the 100 coins. All right, you're always very generous. That guy always gives me 100 coins. All right, next question here. Let me jump over here to the other chat. What do I have here? Bart from Uruguay. Mucho gusto. The ace. Okay. Is this a buy? Okay, good question. Or run for the hills moment. Oh, from Oklahoma. All right, so like I was saying, and I think I answered that question earlier, it's just too early to buy, but I would be interested. I like buying supports in strong markets, okay? I mean, I like doing that. The question is this market no longer strong? We have a lower high in front of us. So it's possible. Now, here's another possibility that we may see. Since I'm on this chart, I'll mention this. We may get a buying attempt, right, over the next few days. And it's going to look very bullish and everyone's going to think, okay, we're going back to the moon again, but it may fail, right? That one may produce another lower high or something. So you have to be prepared for that adjustment. But as far as buying the pullback, it's still an idea. It's still a possibility. It's just a little early, all right? A very aggressive people can step in front of this, but you just have to realize what you're dealing with. And this thing can break, especially in the face of the Fed, which is, you know, on Wednesday. So thanks for asking. Good question. Okay, David from Spain. I know you're from Spain. Okay, good. I got a small position on OMG EUR. If you can give some hints on how to proceed. All right. So OMG against the euro. Oh, interesting. This thing is up today. All right. So here's the thing. If you're long on something like this, which is good, you're in the middle of a breakout. Okay. There's no reason to sell this thing at the moment based on the price action that it's showing right now. But what are some levels that you should be thinking about? Well, there's a level right there. What is that? 9.5 euros. You have a level up in this area here. So you're going into a resistance area. It's certainly not a bad area to be taking something off the table, right? And then you have the high over here, which it's possible it can reach for it. I mean, it's nice to see that it's doing something outside of what Bitcoin's doing. And you get that sometimes, whether some news comes out, some hype, whatever, blah, blah, blah. So you're in a good position, lock some profit in, all right? Usually a good thing, a rule of thumb, we like to take 30% or 1/3 of the position off a lot of times when it goes vertical like that, because you have the people there willing to take it off your hands, right? Don't let greed cloud your mind and say, well, I'm going to hold this thing because it's going to go to 20. It might go to 20, but usually the smart thing to do is take something off the table while you can, and then you're going to try to let some ride, right? And see how it performs as it reaches these resistance areas. But you're in the middle, you're sort of in the middle of one now. So that's how I would proceed on something like this. Lock in a portion and then see where it goes from there. What you don't want to see is a bearish pin bar, right? You don't want to see a bearish pin bar develop over here. That would be a warning sign. Now look, as you can see previously, you get those bearish situations, right? But it basically absorbed all of that. Bearish pin bar over here kind of pulled back, and now look, it's higher. So a bearish pin bar developing doesn't guarantee you're going to get a sell-off, but it should be taken as a warning, okay? And it probably would be a good idea in that scenario to perhaps lock in some more profit and then see where it goes. And if you want to try to let like one third of it ride to see if this thing is on its way to somewhere spectacular, well, you can do that. But keep in mind, when you do something like that, when you let the winner run, which is a good habit, you're also risking the profit that you have, okay? And it's possible that you can give it back. That's why it's so important to lock something in, especially if it's greater than what you risked. So I hope that answers your question. All right, over to the other chat. Let me see what we got here. All right, and XB, thank you again for the coins. Gmail, the markets may be reacting to the Chinese. Oh, yeah. You know, it's funny. Evergrande's group's solvency and debt issue. It has potential to be there. Yeah, so someone had brought that up in my stream on Thursday, right? And I pulled up the chart. The chart looked horrible, okay, that Evergrande situation. And that's funny because this is not a secret, right? The market, this guy knew about it. Look at this thing. This was a stock. It hasn't changed much. It's just going lower. So what, the market's reacting to this now? Where were they a week ago? I mean, this thing's been selling off like this for like months. That's what I mean. The irrational nature of the market. Something catches their attention, and oh, look at this, blah 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 blah, and then it's a big surprise, right? And then the mainstream media gets a hold of it, and now they make a big deal out of it. All right, this was not a secret. We looked at the chart on Thursday, and because someone mentioned in here numerous times and said Bitfinex is exposed to that. That's what this guy was saying. I don't know if that's true, but if Bitfinex is caught in that, well, you know, that could be a problem too. Anyway, so I would do more research on that. I don't know if that's true or how exposed they are. Hey, Douglas, good to see you. Alex, okay, hold on. So let me just jump over to the other chat here. South Africa. All right, hey, welcome. Kip, Iran, welcome. Okay, KGP. If I get your name wrong, I'm sorry. I have a problem seeing. My eyes. Anyway, I think I need glasses or something. So Iran, welcome. All right, thanks for your time. Can you look at VET from Montreal? All right, VET, V-E-T, USDT. Okay, so V-Chain. Look, V-Chain, I've looked at this chart a few times, you know, because I always have a guy in here that asks about V-Chain. Now look at this. So V-Chain has always been a follower, right? It really has not been a leader, not in recent time anyway. And look what's going on. It looks very similar to the Bitcoin chart. You have the lower high established off of this resistance, very similar to Bitcoin. You are at an old support, old resistance, new support. What is that price? 0.8. So basically just in the high 8-cent area, 0.87 area, right? So it's an area of interest, just like Bitcoin. It's a good place to be looking for longs, but it's too early to go long. This can turn into a double bottom. It's possible, all right, based on this low over here. But here's the thing. This pullback, right, Bitcoin had went from 52K on this pullback. Let's just think about the Bitcoin correlation. Bitcoin went from 52K to, what was it, 42, whatever it was, the maximum low that it went to, something like that. And then it's been just trying to like hold up since, right? This thing is lower than that. And Bitcoin, Bitcoin is at 43K. So Bitcoin's not even at its low, at that lowest point, and this thing's going lower, which tells me one thing. This thing's relatively weak. So I don't like that. So it's definitely too early to get involved, right, as far as swing trades go. If you're interested in dollar cost averaging, which I know a lot of people are trying to do with these things, just keep in mind, don't get out of control with these as far as, you know, don't have some undefined amount of money that you want to put in. Don't just say, well, you know, I got 50K and hopefully I don't have to put it all in, but little by little I'm putting it all in. Don't do that. Don't let the market take the money from you. You have to have a preset amount if you want to dollar cost average. The reason why I'm so against dollar cost averaging these things, because these are not investable assets. These are not investment grade. They're like penny stocks, all of them, okay? And no matter what any fake guru tells you, potential, it's all just talk. There's no true value coming out of these things. They don't pay dividends. right? They don't produce any real products like, Intel or Walmart or blah, 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 right? That kind of thing. So that's why dollar cost averaging into these is a very high risk thing. If you want to do it, then I think, it's just my opinion, you should do it with a very small portion of your total portfolio. Maybe 5% of your portfolio. I think 10% is aggressive, but you shouldn't have like 40 or 50% of your portfolio tied up in dollar cost averaging into something like this. Anyway, so that's my dollar cost averaging argument with this. Like I said, it's not about price, it's about sizing with the dollar cost averaging. When we're talking about swing trades, that's when price is really much more important. So we are at attractive levels, like many other coins. Just as there's no price stability. So as far as swing trades go, which are shorter term, have to wait for some sort of stability. And then VeChain and all these other junk coins like Cardano and all that. Yes, I know I'm biased, but I just don't like the hype and the nonsense and how they're taking advantage of people. That really bothers me. Maybe because I've been taken advantage, many times people have taken advantage of me. And I don't like that, they're just preying on people's hope, right? And that's what a lot of that's what's going on with these coins. So anyway, that's what I'd wait for on something like that as far as a swing trade. I hope that answers your question. I don't want to get too excited here. Let me answer some more questions. I got a lot of questions. How am I doing with time? Okay, not too bad, not too bad. I'm going to see if I can get through a few more questions here. All right, so hello from Athens. Greece. Okay, cool. Thank you for sharing. No problem. I don't see too many from Greece here. All right, cool. Thank you for joining. Seattle, hey, okay. H-bar. All right, let's take a look. H-bar. I remember seeing some hype videos on this one. Not surprised. So look at this, right? Notice, the hype videos are usually occurring when it goes like that. Now, I hope you're not caught in this H-bar. So here's the thing. What's the first thing, and many people that watch me regularly, what's the first thing that I say when it looks like this? What's the first thing that I say? Stay away from it. That's the first thing that I always say, no matter what coin it is. If it's vertical, stay away from it because you're buying the top of the herd mentality. All right, we just don't know where that top is going to be. So here we go. We got the pullback. Okay, cool. So pullbacks, that's what we want to see on something that's generally strong. So let's see where the supports are. Do you have a support right there, right? Well, we can argue that there's one up in here too, which it broke. All right, fine. So you have this support area. What is this price? 36 and a quarter. So basically 36 cents around there, all right? You have a support and it's trying to hold it. You have a pin bar developing or you have a tail on that candle. All right, fine. So like many other altcoins, you have a point of interest, but you need to wait until the price stabilizes, right? Now, if this support breaks, you're looking at this support next, all right, which is what, 27 cents around there. So this thing can still pull back, another possibly 8 cents, 9 cents. It's possible. If this momentum continues. So you don't want to get caught in that, right? It's best to wait for stability, in my opinion, instead of trying to get the best price. So you keep these things on your radar. Look at all this consolidation. Look at all this. I want to point this out. See all this mess over here? You see that? That means something. That means something going into the future, especially if you notice, if you draw a midpoint on the consolidation, look where it bounced off of. You see this over and over again. I'm not just making this up as I go, right? You see this often, right? The midpoint of a consolidation. Why does that happen? Because you have to understand half of the population that's in this consolidation, half of them are long, half of them are short. So one half of that population is going to react, right, when the market goes back to their price and makes them whole again, right? Or makes them. What happens when you're short, or you're long in this case, or no, let's say you're short, right? This gives you an opportunity to break even. So what do? You buy it, right? And then new longs are going to pile in because, hey, it's an opportunity to buy. So that's usually the phenomenon behind something like that. Okay, I don't want to confuse people with that kind of stuff. But anyway, the point is you have a level of interest. Wait until this thing can stabilize. Because again, stepping in front of that idea is still a very hard thing to do because it can clear the level. It can just go right through it. Even though, a lot of times it'll hold like this. Sometimes you just may get a temporary bounce. and then this candle may close weak, right? And if it closes weak, that's not what you want to see. That's why I don't encourage stepping in front. Wait for the double bottom to develop, all right? So this would be the area. Let this thing pop up a bit, let it retest. Also, Bitcoin should be doing something similar, or Ethereum. They should be doing something similar. If they're not, and they're breaking, then it's still too early with these, okay? So that's what I'd say about this, but at least you have a pullback, okay, if anything. All right, so thank you for asking about H-bar. I hope that answers your question. All right, let me jump over to the other chat. All right, let me see what I got here. Okay, hey, Douglas, good to see you. All right, so Alex from Romania. I got where's Schwartz? Schwartz Bond, I call him. He's the international man of mystery. I don't see him here today. Schwartz was in Monaco the other day. Anyway, he's my Romanian representative. So Alex from Romania, what do you think about BTC to 3537? All right, so I mean, I could pull that chart up again real quick. 35 to 37K is a possibility. 37 is a support level. All right, 35 is a support level. So those are levels that are possibilities, but there's no way to know if we're going to go that far, right? I'd actually anticipate support coming in sooner than that, you know, maybe around the 41K to 40K. That's where I would like to see. So 37K is possible. We just have to see. All right, that's why you have to keep an open mind. If we get a reversal sooner than that, you know, and it meets the criteria that I'm looking for, I would be open to a long sooner than that. Okay, but those are certainly notable support levels. So thanks for asking. Hey, Andre, good to see you. Shank, hey, good to see you. Israel, can you comment on silver? Yeah, sure, that's a good one. XAG USD. So silver is following gold pretty much, right? A lot of hype and a lot of opinions on silver too. But silver is generally a gold follower. Now, if you look at these things, silver, this is a range. That's definitely a range. There's no trend here. Look at the range low. It's your range low, and you're fooling around at the range low. So attractive price for silver, definitely attractive, and one for the long radar, okay? Now, here's the thing. Does it hold the support or does it break? Let's take a look at gold. I mean, I went over gold earlier. What did I say about gold? Gold is in a potential support area as well. Now, these two are going to be dependent on what the dollar does over the next few days, or on Fed Day, which is Wednesday, right? So if the Fed comes out dollar bullish, well, these things are going to get hammered, right? So silver would be likely to break that support. If the Fed comes out dollar bearish, then you're probably going to see some more buying in these things. These are at attractive levels for buying, right? So we see the buying attempt is going on in gold, and you see, so silver I would be expecting to follow, XAG USD. I'd be expecting it to follow. It's just not there yet. So here's one thing you could do with silver if you want to be aggressive with it, because again, you are going against the recent structure, but I would not classify that as a trend on this time frame. On a smaller time frame, sure, you could say it's a bearish trend, but we're not talking about smaller time frames. You have what here is a double bottom. A lot of people get thrown off by that. They get confused by the smaller time frame and think that's the dominant trend. Meanwhile, the bigger picture is showing something different, right? And then what do? You short right into a bottom, which is what you don't want to do. So if this candle holds and you take out the high, which is 2251, you take out that high, that would actually be a buy signal off of a potential double bottom. You could measure your risk from that low, which is what? What is that low here? 2203. So 22 is going to be your level, right? And it obviously bounced off that level before in August. So that's what you're watching for on something like silver. So at this moment, it's a pretty risky thing to do because there's no way to know if it's going to hold. But if it takes out that high, you can define your risk and you have a buy signal. And I would be expecting the Fed to, obviously be saying something supportive. Now, keep something in mind. With something like the Fed, it's possible that you get a large green, outside bar type candle, engulfing candle, when the announcement comes out, and then it closes with a long tail on top of it. And then the next candle is red. You don't want to see that. If you take a long and it turns into a bearish signal, like right away, then that would call for an adjustment, right? Or just have your stop in place and you get stopped out, you get stopped out. That's why I cannot emphasize enough the importance of having the stops and having them in the right place. Look, there's no guarantee in this game that you're going to make money. Number one, I'm not just telling that to you, but by removing the stop, you open yourself up to enormous risk. And it's very easy to lose a lot of money in those situations. And eventually it will happen. If you get around it the first couple of times because the market comes back, right? And the recent market that we've seen, like across the stocks especially, we've seen a very forgiving and a very optimistic market where all you have to do is use the hope strategy and it comes back for you, but not today. Okay, anyway, so I wonder how many people are caught in that mess. All right, so thanks for asking about silver. All right, let me jump back to the other chat here. How do you identify BTC buy signal or sell signal on the daily? Well, so I have certain criteria, right, that I'm looking for. And basically, I'm looking for candlestick action to actually give me the signal. But that signal needs to occur at a certain level. I won't just take any candlestick buy signal. We had a candlestick buy signal the other day over here, right? That green candle was actually a buy signal. I didn't call that. I wouldn't go near it because I don't like the level. So I mentioned that. I wrote about that in my TradingView article. But that's to answer your question. That's the quick answer. I'm looking for particular candlestick action at a particular level. All right, and that should also be within the context of a certain structure. That's really what the candlesticks need to develop into something that makes sense to me, right? Like a double bottom or something like that. Okay, so thanks for asking. Sushi USD. Man, they got a coin for everything, huh? Sushi USD. Let's take a look. All right, so this kind of reminds me of, what was that other one that was breaking out? DOT was breaking out, right? So this is what I mean about breakout. Why I don't buy breakouts, right? And people know that. I say that all the time. I don't buy breakouts. If you see a candle that develops like that after you buy into it and it takes out the low, you are now in a fake out, right? And now here's where it goes. Okay, fine. So now we're over that, right? General structure, we can argue in recent time, general structure is still bullish or strong, right? Higher lows, higher highs, except for this consolidation that's developed over these recent few weeks. So as far as interest for longs, because I wouldn't short this. I don't short these coins at all. You're looking at a potential double bottom, right? Just like all these other ones we looked at, similar situation, too early to buy into. This candle is too big and it's too big, right? It's red and it's too big, just like Bitcoin. So you have a level of interest, wait for a reversal near this range low area, right? This entire area is an area of interest. So if you can get the reversal in that area, that can give you a swing trade opportunity, and you could measure your rewards based on this range high area. Now, we don't know if it's going to make a new high. Also, Bitcoin will have to be agreeing with you on this. So if this thing tries to reverse, right? Let's say you get a bullish inside bar here over the next few days, and Bitcoin looks ugly. Bitcoin is not doing that. Then I would hold off, because just because a buy signal develops here, this is not a leader. I mean, sushi is certainly not a leader. So it can break, right? If Bitcoin doesn't agree, that little inside bar is meaningless and it could break the support. So that's how I would treat something like this. Use Bitcoin as your guide. You have a level on a lot of these altcoins. So this is a good time to be paying attention to the support level, but make sure Bitcoin agrees. If Bitcoin breaks those supports, these things are going to break their supports, all of them. And if that occurs, then what I would be anticipating over the following weeks is just basically an out of play mode out of the market. I'm not going to call that a bear market like some of these fake gurus are going to. I would just call it out of play. I wouldn't be expecting these to continue to push lows and push lows and push lows. I'd be expecting them to more consolidate around an old level until there's some sort of interest in Bitcoin again, bullish interest, okay? Real bullish interest, not one candle. All right, so thanks for asking. Can check out Euro Aussie. Oh, I got a Forex request over here. All right, so I'm going to answer that one, and I'm going to jump back to the chat. All right, Euro Aussie. So here's the thing. Euro against Aussie dollar, AUD, Euro Aussie. So I'm not a big fan of these cross pairs, but all right, let's take a look. I prefer like Euro against something very stable like US dollar or whatever, but we'll take a look. So you have a potential resistance right here where it is right now, and you have a pin bar developing. So it's not closed yet. If it takes out the low of this candle tomorrow, which is 160, well, what's the low? 161.30. 1.6130, that would be your sell signal off of a potential lower high. Okay, now I'm seeing these patterns all over the place. You have a shoulder, you have a head over here, you have a shoulder. Okay, so this is a head and shoulders pattern. It doesn't guarantee that you're going to be in a bearish mode or a bearish market or anything like that. These patterns occur randomly, but you may see some type of pullback, right, over the next few days until it reaches that support area, which is what? You have a support around 159, 160, this area right here. That would be the area I'd be looking for. If you take a short on something like this, this would actually be a nice aggressive short candidate because you have the lower high being established. Okay, keep in mind, the bigger picture is bullish, right? This is nothing but higher lows and higher highs. So this is a counter trend. It would still be counter trend at this time, and you have to keep that in mind. It doesn't mean you need to avoid it. You can make something like that as a swing trade. There's some potential there, but just keep in mind what you're dealing with. Right? I would expect, until this configuration confirms the bearish structure, I would expect the support to hold. Okay, which means if you're short, probably a good idea to take profits around there or measure your potential from such a level and possibly look for longs, right, in that area if you do something like that. But at this moment, if anything, I would consider this an aggressive short. I don't encourage taking counter trend trades, unless you understand what you're going up against. Okay, so if you're nimble and you're confident in your decision making, and it goes the wrong way, then you should be confident and quick enough to get out and make an adjustment. Right? If the broader bullish trend continues, that's why counter trend trades are very tough to take, especially for beginners, because they don't know how to adjust. Anyway, thank you for asking. All right, let me jump over to the other chat here. So that was Euro Aussie. All right. So, okay, Andre, hey, good to see you. Okay, I went over these. Shorty from Amsterdam. All right. What is that? All right. Is there a symbol for that? Can you maybe type in the symbol? What is, yeah, I don't know. Maybe you could type in the symbol. I don't know what that is. TR, I don't know what that is. So please, maybe you can answer that. I know that you typed that in a long time ago. Do you know BitMax AOA? No, I don't know what that is. Hi guys. Hey, travel from Italy. Buongiorno. Do you know BitMax? No, okay, the same question. Okay, Shorty. By the way, BTC doesn't show price action and weakness. Probably waiting on outcome for tomorrow, even though smart money. Okay, I'm not sure what you mean by that either, but okay. Let me see what else we got here. So which could act as an extra bearish catalyst? Okay. Following fundamentals makes you lose more money. Well, you know what the problem with fundamentals is they can give you a strong opinion, or they get mixed up with logic, right? So people say, well, I know what that means, and yeah, I agree with that. It's like saying, well, I use Apple iPhones, and therefore Apple should be a good stock because I use it, and so everyone else uses it too. Yeah, right. Yeah, nice. But that's logic, okay? And you're applying that to a random environment. Doesn't mix very well. So when it works coincidentally or randomly. Look, I bought Apple at 130 and it's at 150. I'm a genius. Now Apple's back at, whatever. So anyway, all right, I'm not going to go on that rant. But I talk to a lot of people like that. It's very annoying. Okay, Shorty. People prefer dreams instead of reality. Yes, that's very true, especially on the internet. I remember when really, skill-wise guys got a lot of attention on TradingView while I was learning and thinking they wrong. Okay. Well, yeah, it's true though. The reason why, if you watch a lot of these guys, they don't provide real value. What they provide, because I watch a lot of videos and I'm looking for the value. I'm looking, what is this guy teaching me? Why is so many people watching this guy? What is it? What they do is they sell dreams and they offer hope. Hope is very appealing. Okay, so even if you're not paying for anything, like, oh, this guy is not, he doesn't have anything to sell me. He's just giving me good information. Well, no, he's poisoning your mind with hope, and then maybe he has like an affiliate link or something for you to click on, right? But hope is a bad thing in the markets because markets are random. Hope will not help you here. That's why I have such a problem. What I tell those people, what I'd like to tell those people is don't sell market information or investing information, because people can lose all of their money that way, right? Something that starts out at a small loss can turn into a big loss because of hope. Sell makeup, sell dating advice, because you buy a makeup product, you spend $100, and that's the most you're going to lose. $100. You're going to use the makeup, and you're going to like it, or you're not going to like it, and you're not going to buy it again if you don't like it, right? And that's it. Your $100 loss doesn't turn into a $1,000 loss when you're buying a product like that. So anyway, that's what I have to say about those fake gurus. But they're using this as a marketing tool, and they're preying on people's need for hope. And in this game, there's a lot of need for hope. That's why I'm so unpopular, because I give the opposite message. No one likes the stuff that I have to say. But I have some people here that do appreciate my realistic point of view, and I appreciate that. All right, so let me go back. I don't want to rant. I've been talking too long. I don't want to go on one of those long rants like I usually do. All right, let me jump into the chat here. What do you think of LCID? Okay, LCID. What is that? Is that a coin, or is that a stock? I don't know if that's. Let me try the coin. LCID, USD. No, I guess it's a stock. LCID. So what do I think of this? How much is it? $24. Okay, a nice little uptick today. I guess nice little bullish movement today in a pretty bear market. All right. So a stock like this, hopefully this is the correct symbol. You have a consolidation that's been going on for some time, right? This tells me right here, you see this? This tells me that it was hyped sometime, all that was hype, some kind of nonsense, some kind of hype, some kind of whatever. And then the hype came out of it, right? And since then, it's been in this consolidation. Okay, fine. Now, here's the thing. You're near the range high of the consolidation. So I wouldn't buy this near a range high, because you don't know if this is going to break out of the consolidation or not. Usually, when these things get near those range highs, it starts to catch people's attention. Day traders start to get a hold of it from their trade, software. Their pops up on their radar, blah blah blah, right? Their trade scanners. If you're going to buy something like this, wait for the range low or somewhere near the range low. All right, you have that whole area there, which is what? What is that? 17 and a quarter, maybe 18, maybe $20, something like that. That's a much better place to be thinking about it than at 5 points higher, which is where it is now. So I would hold off on that, especially with that type of price history. Okay, possible that this thing breaks out and keeps going, but it's also very possible it finds resistance around the range high and pulls back. Also, buying in the middle of a range like this is usually a very 50-50 type of thing to do. That's why at least near the range low, probability is more favorable. Why? Because it's a more attractive place to buy. People have bought there quite a few times, right? Look at this. Look at this area back here. Double bottom. This is a failed low relative to this low. So obviously there's buying activity there, all right, in this area, and much better in terms of probability if it can revisit again. As you can see, when it revisited here, it didn't stay there very long, okay? So I'd wait for something like that. Thank you for asking about LCID. Hello from Canada. Hey, welcome. All right. Are you buying or selling any assets today? No, I'm not doing anything. I'm not touching a thing. I'm waiting for stability. So thanks for asking. Whether it's Bitcoin, stocks, I'm not touching nothing. I'm interested in gold, actually, but I haven't done anything with it yet. Okay, let me see what else we got here. Okay, shorty. People prefer... Okay, I went over that. James, please, if you can, Euro USD for a long. All right, from London. James from London. All right, let's take a look. Euro. I don't get too many Forex requests, so that's nice. All right. Euro. So Euro pulling back in the face of a stronger dollar. Now, Euro is basically the inverse of the dollar index, right? Because I think the Euro is the highest weighted currency in the dollar index. So I'm not surprised to see this bullish pin bar developing here while the dollar index is showing a bearish pin bar. All right, so as far as a long goes, here's the thing. This is going to be, you're going into the Fed in a situation with this thing. This is going to be very dependent, just like gold, just like silver, just like all those other currency pairs against the dollar. The Fed is going to have could have a serious effect on this, right? So I would wait. Now, to answer your question, is it a long? You have the pin bar. You have a potential higher low, okay? So I would call this an aggressive long, The high 1736 needs to be taken out. What is this thing right now? 1720. It's only 10 pips lower. But if the candle closes and you take out that high, you will have your buy signal on this off of a high or low. But the Fed can come out and change things very quickly on Wednesday, and you can see an outside candle develop like that, right? It's very possible. So to answer your question, yeah, I would agree with the long. You're near a long area. Look at these supports here, right? You have a support here. You have one over here. And generally, if you just go zoom out on the euro, I mean, you're near a range low, okay? You're not off of a range high, so if anything, this is a possible area to look for longs. Also, look at this consolidation back here, okay? You're basically in that area as well. So a lot of reasons to be attractive, that are attractive for longs, probability-wise. It's just the market hasn't proven it just yet, and you're going into the Fed. So there's a couple of ways you can go about this. You want to be aggressive? You can take the break of the pin bar high. That's aggressive, and use the pin bar low basically as your stop. Or if you want to give it more room, you give it the swing low from back here, 1639, right? Your stop would have to go somewhere there. It's much riskier to do something like that. Or you can wait for the Fed to come out and see what kind of formation you get. Maybe you get a worse price, but if the Fed says something dollar bearish, this thing should give you a nice big green candle, okay? And then you can maybe give that a try. You're going to be taking some more risk at that point because the candle will probably be wide. But typically for euro, you shouldn't be taking more than 30 or 40 pips, maybe 50 points max of risk on something like the euro, because this is usually not like a crazy mover, right? It's not like the pound or something like that. So that's how I would treat that. But I definitely could see your point of view on the long side. I definitely can see that. So thanks for asking. Just keep in mind the Fed can change that picture real quick. And so if I was taking this position, I would wait for the Fed to come out because I prefer to have more certainty, and I want to make sure that the Fed doesn't say something that completely goes against this position. So CBOR, TradingView just changed back to 100 coin. Charged back. Oh yeah, they took it back. Right. Yeah. Joking. Okay. So let me go back to the other chat here. How does SOL? Oh, Solana. SOL, US. I haven't heard from this one in a while. Let's see. How is Solana? Remember how exciting this was just a couple of weeks ago, Seinfeld says. And look, I warned about the pin bar high, right? I warned about it. I hope people aren't caught in that. Now, here's the thing. Solana was on its own for a little while, hype, whatever you want to call it, blah, blah, blah. Now, with Bitcoin pulling back the way it is, now Solana is following again. What a big surprise. More importantly, though, we have a lower high established here. Not good. Don't want to see that when you're long, okay? So I hope you're not long. Now, as far as bigger picture goes, so that's the recent price action. That's the recent structure. This bullish structure here is arguably bullish. Can't argue with that. So we are at support levels, which is what you want to see in a bullish trend. Okay, fine. So we are at a level of interest. I talked about this in previous streams too, where I covered Solana. So what is this price? 130 area? So you are in an area of interest. It's just a little early. Now look, let me give you an example of something here. Because again, being a good market timer, really, it's not about taking good trades. You know what it's about? It's about being able to adjust. And good trades are a result of being able to adjust. Look at this bullish pin bar. That is a buy signal. Okay, took out the high. And look, green candle close. If you took that break of that pin bar high, that's a buy signal. But there was no follow through. It gave you the next candle was an inside bar and then sell signal, right? Bitcoin produced something similar the other day. So that's what I mean about adjusting. When you buy something and then this happens, right? That's like basically the next set of candles. That calls for adjustment if you know what you're doing. So you take a smaller loss, you maybe tighten your stop, maybe you take a small gain or something if you have one, but that's where you have to make the adjustment because this is what's likely to happen next, right? And you got the sell signal. So that's what I mean about adjustment, right? So here's what I want to say. The reason why I bring that up is, what if you get another pin bar that develops over here? What if you get that? that would be another buy signal off of a support level. So that all fits, and that's within a broader bullish trend. So if you get that, that could be a signal to go long. And there's plenty of potential here to justify your risk. Okay, your risk would be defined at that time. If we use this pin bar as an example, 153.55 and the low is 134, you're looking at what, 19 points of risk? So you round that to 20 points, right? So if your typical risk is 20 points, you need to make a minimum 20 points, at minimum, otherwise you're wasting your time. So that's if you can get that. Now, same thing, like I'm saying before with these other altcoins, if you get the reversal there, Bitcoin or Ethereum, they should be doing something similar. If they're not, then you're probably getting caught up in noise. So if you want to be aggressive and give it a try and say, well, you know, it'll do its own thing. Okay, you can give that a try, but just keep in mind, if the next candle fails, then that really calls for adjustment. Okay, and either way, if you don't know how to adjust, either way, you should have a stop loss in there and just let it go to the stop loss and take the loss. Don't go into hope mode and get caught in these things. All right, so that's Solana. Thanks for asking. All right, hi from the UAE. Hey, welcome. All right, would you take a look at Varda, please? What is Varda? Is that a stock? Is that a coin? I'm going to type the word Varda in. I guess that's a stock on the German exchange, I guess. Ooh, that doesn't look good. Well, correct me if I'm wrong on that symbol, but if that's Varda, well, here's what I see right off the bat. Lower high, okay, lower low, which means don't want to step in front of this. You have supports, right? You're going into a support area, right, from previous supports. You have them, but the structure is definitely not in your favor, and certainly not that candle. So I would hold off on this and wait and see how it performs. Burge sent me 100 coins. Thank you so much, Burge. I appreciate that. That's very generous of you. Thank you. You don't have to send me those coins, but thank you. Thank you. All right, so that's what I have to say about Varda. Hold off on this thing, right? Hopefully you're not in it. If you're in it, I don't know what to tell you. I mean, this thing, it looks, the potential right now is for this thing to go lower unless it proves otherwise, all right? Meaning it gives us some stability candles over the next few days. But we don't know. The market has to prove that, right? You can't predict these things. All right. So, but you do have support levels, certainly a good place to watch and see if you get some sort of change. In this case, I would wait for structural change, not just one single candle. Thanks for asking. Okay, so opinion on OMG. So I went over OMG EUR earlier. You can wait till my stream is over and then watch it again, because OMG EUR, I mean, it's probably going to look just like OMG USD, right? Probably look the same thing. Yeah, same thing. Like I said before, if you're in it, take some profits off the table, try to let some ride. You are in a resistance area, okay? It is in a resistance area, but at the moment, there's no reason to sell. Okay, I went over Cardano earlier. If you can just wait till my stream is over and then rewatch the stream, I went over Cardano, so I won't go over it again. Can you look at EGLD USDT? Okay, eGold, EGLD hold on. EGLD USDT. Oh yeah, all right. So again with these things, I hope you're not caught with the herd mentality. This is all herd mentality over here, up to high. So you're pulling back. First thing I want to see are support levels. You have a support level. How many coins have we seen like this, right? They're all pulling back to support levels. So they're all good to put on the radar, right? If you're interested in this particular coin. That's your first support, where it is right now, 205 area. Your next support is around 130, 148, 150 area, 150 area, okay? Those are your supports. There's no price action at the moment to support this thing or to make it attractive as a long. So it's early. It's too early to get into this thing as far as swing trades go. You know, position trade, different story, but swing trades, no. So I would wait, just like on that Varda stock, I would wait for this thing to show some stability. It may take a few days. What you want to see is a double bottom develop around this level where it is now, or a possible failed low, okay, or higher low. That's probably the more conservative thing to do. Stepping in front of this is too early. While it could work, the risk is very high, because if Bitcoin breaks, if there's whatever, and Bitcoin pushes further, these things are likely to push further, and there's just no reason to buy at the moment, okay? So it's a very tricky game here. All right, so other chat. All right, I got to wrap this up soon. How long have I been talking? I'm talking really long. 1:34. Okay, so I'm going to wrap this up here in just a few more minutes. I really appreciate everyone's questions. If I didn't get to your question, I apologize. I haven't been on TradingView in a while, so yeah. All right, so let me see what else I got here. That was, all right, would you mind sharing your TradingView configuration? I don't know how I would share something like that. I mean, my configuration bar is very simple. I don't have anything on it, right? I mean, all I'm doing is drawing lines and boxes. So I don't have anything. There is no really configuration to share. It's just simple. All right, so thanks for asking. Elizabeth, hey, how are you? Thanks for keeping us rational and out of hope mode. Well, no problem. Yeah, hope mode is a very costly thing. Like I said, hope is not a strategy, okay? Have you been looking at Moon River, MOVR, by any chance? Being a small market cap, it's probably risky to hold right now. What's your opinion? Francois asks. Okay, so let's take a look here. Moon River, is that a coin? Let's see. I guess it is. Moon River against Tether. All right, interesting. So thanks for bringing this one up, Francois. Obviously, if it's a low market cap, hype coin, right? Look at the vertical nature of it. All right, fine. Obviously, not much data on it either, unless, let me see something. MOVR USD. Okay, so it doesn't look like there's much history on it. MOVR USDT on what is that? KuCoin. Okay. So here's the thing. The general structure is bullish, but it's pulling back with everything else right now. All right, fine. So that tells me one thing. It's not a leader. It's definitely not a leader. And it's eventually going to start following Bitcoin if it's not following it right now, which it looks to be following. So in this case, you still have the bullish structure. Look for supports. You have a support in this area, basically where it's fooling around right now. No surprise there. The next support is right there. That's your historical support. It's very possible, though, that this thing finds support somewhere in between. Why is that? You know why? Because people take a Fibonacci tool, draw from the low to the high, and get a 50% right in the middle there. And often, people will react to that. Traders tend to react to that. So those are areas to consider. What is that 50% area? 254. You can round that to 250. So those would be the levels of interest, right? So you're at one right now, which is around 330 area, 250, and then you have, what is this here? 190, around 200. Those are your levels. Now, what you want to see, though, is you want to see better price action. This is not good price action for longs. So you might as well wait to see if you get some stability, meaning an inside bar or something, bullish pin bar. That's aggressive because it's a single candle. The more conservative thing to do, wait for the double bottom to develop over the next week or something like that, if it can deliver that. It's possible that you get a bullish pin bar, right, and it just goes back up. But, those situations, don't try to catch all those dramatic moves at times. You're better off waiting for higher probability. And when those other ones get out of, when they move too quickly, those are low probability anyway. They look great after the fact. What you don't realize is trying to catch them is very costly. Right? And that's what people don't see, or the other gurus don't talk about. They only talk about, oh, look how much money I made after the fact. Oh, look at this signal over here. Oh, how easy it was. Now buy my products. Right? That's what they do. But what you don't realize is the process of catching such a move, meaning, what do I mean by that? Like a move like this, right? Nice candle, and then turns green, blah, blah, blah. How do you catch it right here? Well, you're not going to do that on a swing trade time frame because you need the candle to close. So that would have to be more like a day trade. But anyway, I'm not going to get into that. My point is, don't chase those, okay? Let things come to you and let them meet your criteria. And that means you're going to miss a lot of stuff. But who cares? Again, because the process of trying to catch these things are more costly than when you finally get one, you're not going to make enough money back anyway, right? So it's the whole effort is pointless. All right, so thanks for asking about Moon River. Okay. I'm liquidated, okay? Oh, I hope you're joking. The scammer! The scammer is back. BTC bottom is in, the scammer says. I don't know about that. It's too early to tell, but thanks for mentioning the scammer. Schwartz, there he is. Schwartz Bond, international man of mystery. Back in Romania. He is back in Romania. All right, cool. He's my Romanian representative. He governs he governs all the Romanians for me in Romania because I'm very popular there. All right, thanks, Schwartz. Thanks for stopping by. All right, let me jump over to the other chat. How do you determine where to put your stop loss? Okay, that's a good question. Hold on. Let me just go back here. All right, Cardano. All right, so a couple more minutes. I just like to talk. I can't stop. Can you, all right, so eGold, I bought gold 10 minutes ago. What do you think about XAU USD? All right, I'll just take a look at that real quick, right? Bought gold 10 minutes ago. I like gold, all right, to be honest with you. So around 1765 area. It hasn't turned into a buy signal yet, technically, but once this candle closes, in fact, I think it is closed, or maybe it closes in an hour or whatever. When it takes out that candle high, you have your buy signal. So I don't have a problem with the position. Just keep in mind your stop is going to have to go like 30 points lower. For one, you have this outside bar. It's a wide range bar, and you're going up against the Fed on Wednesday. So if the Fed goes your way, the position should be okay, right? Because gold should continue higher back into the 1800 area resistance, possibly higher. That's possible. If the Fed doesn't go your way, this is going to turn into a bearish pin bar, right? You're going to see something bearish, and gold can break this supportive area, right? And move 30 points very quickly the wrong way. So keep that in mind. Any Forex trade or, gold, silver, anything against the dollar, today, tomorrow, you're going against the Fed on Wednesday. Just keep that in mind. It's possible that the Fed says something that's in your favor, but that's the coin you're flipping. There's no way to know in advance unless you're an insider or you're a big hedge fund and you can pay someone off at the Fed and find out before everyone else. I wonder if that's going on. All right, anyway, so thanks for asking about gold. I like the position. I like the gold idea long. It's aggressive, but I like it. So thanks for asking. And I don't like, and just so you know, I don't like too many things, okay? All right, let me see how do you determine where to put your stop loss? Well, typically, I'm looking at the candle, right, the daily candle. It has to do with the candle itself and the levels, too, all right? And also how much risk I'm willing to take. I'm not going to put the stop loss less than the candle. Like, for example, with gold. I'm not going to say, well, I don't want to risk 30 points. I only want to risk 10 points. That I'm probably going to get stopped out if I do that because you're inside this range. Okay, so it's either 30 points or you're looking at this swing low, which is like 100 points lower. That's a little unreasonable for gold. So how do you manage that? It's really a function of size. Okay, so anyway, I hope that answers your question. How about the Russell 2000? All right, R2K, US 2000. I don't get that one very often. Look, it's a major index, right? Russell 2000, small caps. This thing has been acting relatively weak for a while. It's been range bound in the face of, remember when the S&P and NASDAQ new all-time highs every day? This thing was not making all-time highs. It was failing and failing and failing. So that was a sign of relative weakness, and here we are. This thing is range bound, okay? Clearly, look at this consolidation for quite some time. So what about this thing? Well, it's not along now, definitely too early. You want to see if this thing can give you an opportunity at the range lows. Look at that level. Look how much buying has occurred at that range low. That's where your probability is for a long. So right now, it's too early, but that's the area I'd be watching. If you're interested in the Russell for a swing trade, or maybe that'd be nice for an options trade, like a short put or something. 2120, so 21 area, 2100 on the CFD. That would be the place to look for it. Right now, you're going to have a lot of people that are going to step into this early because they're going to be like, oh, how much lower can it go? It's at the low. Yeah. This is a random area. Look, I need to emphasize this. This entire area, look at this. This entire area, okay, this area is highly random. Anything can happen in this area. So if it happens to go your way, it has nothing to do with your skill because it's random here. 50-50. You can flip a coin and get a similar result, right? So that's why I don't like buying. I don't like the midpoints. I really don't. These are good. This is a good place to get out of a trade, not get into a trade, right? So I hope you understand that. So yeah, I would wait for the range low on something like this and see if you get the reversal there. So thanks for asking about the Russell. All right, let me jump back to the chat. Okay, I got to wrap this up. I like the positive energy coming from this stream. All right, the scammer, cool. As long as you're not scamming me, we're good. Absolute. What do you think about XAU? Oh, he asked the same question in here. Okay. You remembered my comment from Thursday about Evergrande. Yeah, Alex, maybe you understand now. Yeah, and so it was Alex who brought that up. And Alex, and thanks for bringing that up into the stream because I don't pay attention to anything in the news at all. So when you guys give me information, I mean, you know, I get information from you guys. Sometimes I can spot trade ideas from things that you mention. So that's a nice thing about the community here. And thank you for mentioning it and emphasizing it so much. 'Cause I remember you mentioned it like 10 times. And then I eventually put the chart up. So thanks, Alex. Appreciate that. Please look at all altcoin and Bitcoin on weekly chart. Everything is similar. Well, and Sheng, thank you for bringing that up as well. Right? We all know Bitcoin is the leader. So all these altcoins are going to be in a similar situation, just like we pointed out. I mean, how many of these altcoins look the same? Okay, same situation. They're all at support levels, and they're all too early to buy as far as swing trades go. So it just requires some patience, all right, and just waiting for the right setup to develop. Anyway, thanks for mentioning. All right, let me just run through this other chat. Nice to catch your stream. Hope, okay, appreciate. Oh, from Argentina. I don't think you guys speak Spanish over there. Mucho gusto. All right, okay, no problem. How Frac makes her, okay, I don't know what that is. All right, thanks for your, okay, no problem, no problem. Doji coin. All right. I'll wrap this up with Doji. I'll do Doji coin. I haven't heard from that one in a while. And then we'll just wrap this up on Bitcoin. Well, you know, again, no surprise here. All these things are sagging right back to their supports. Okay. They're all doing the same thing. So too early to buy into these. And like I said before, I don't like the idea of dollar cost averaging into these garbage coins. If you're going to dollar cost average into a coin, at least pick a leader like Litecoin or Bitcoin or Ethereum or something like that. A lot of people go after these garbage coins because they think, oh, this thing is going to be at $1,000 because Elon Musk is going to do another tweet because some guy on TikTok told me that. Yeah, please take that hope out of your system if that's what you're hoping. All right, so here's the thing. You're at supports. Let this thing stabilize. Let Bitcoin stabilize. You may have a buying opportunity if it can hold. If Bitcoin breaks, they're all breaking, okay? So, and at the moment, they don't look good. There's no reason to buy this right now with a candle that looks like that. So I would just hold off and wait for stability. Okay, so I'm gonna leave you with that. Everyone, I wanna thank you all for watching here. So let me just pull up Bitcoin and let me just say a few words, all right, so to leave you with. I know people are like in different parts of the world. Why is this thing freezing on me? And I know it's different time zones and TradingView doesn't want to cooperate with me. They probably got mad at me because I made that comment before. They're like, yeah, we're going to cut his thing off. We're going to cut off his connection and see how he likes that, giving us a hard time here while we give him 100 coins. I'm joking, I'm joking. TradingView is very nice. All right, so let me leave you with this. Keep in mind a couple of things. Bitcoin is the leader. All right, that's number one. Always put that in your mind first. Bitcoin is the leader. What Bitcoin does, most of these coins most likely will follow. Not all of them. Some of them do their own thing. But understand, when something is doing its own thing, it's probably a result of hype or some chat room somewhere where they're hyping it or some YouTube blah, 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 right? Keep that in mind. Don't be part of the herd mentality. Understand that everyone is consuming the same information that you are. That's why everyone's behavior is very similar. You want to stop doing that. And here's one thing I want you to take into account or embrace this idea first. If you want to get better at this, markets are highly random. Embrace that idea. There's no way to predict these things, all right? You're going to have a lot of people claiming that they can. And because of the random nature, occasionally they will be right and they will push those, you know, oh, look, I was right. And they're going to look smart. They're going to look like they have some kind of advantage. If you're not an insider, okay, you don't know the CEO of Coinbase, he's not giving you inside information and all that other stuff, then you do not have any advantage. Nothing. No oscillator will give you an advantage. No moving average is going to give you an advantage. All of that information is 50-50. It's random. So you need to embrace that, right? The only thing that can help us get around that or get by in a random environment is our money management and how we manage our risk. So I always tell people, risk first, okay? So like in a situation like Bitcoin, you have to ask yourself, you know, risk. What is the risk? What if I buy this right now? It's at a decent level, but the risk is it may keep going and start breaking these supports. So what am I going to do? Why am I going to step in front of it when there's no reason to buy this besides a level alone, knowing that this is 50-50? Okay, it may work out my way, but it may not. And I need to know a place to put my stop. And I need to be able to do this, on a repetitive basis, not just once in a while. Back here, you could have been like, oh yeah, I bought it, I stepped in front of it, and it worked out for me, and I made some money. Right, but playing that game eventually is going to stop working, okay, because markets are random. So if you step in front of that, it may keep going, right? There's a lower chance, but it may keep going. And when you get caught, if your stop isn't set or blah, 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 you can lose a lot of money. So the idea is to take opportunities that present a specific amount of risk or a fixed risk with a decent potential. So we're partly there with Bitcoin. We have a level, but I can't define risk here, okay? Because there's no candle telling me that other buyers are stepping in. There's nothing here that says that besides this little tail, okay? On this time frame, remember, I'm focused on this time frame, which is swing trade. This is the swing trade time frame. This is not day trade, which is a different story. All right, so that's the thing I want to tell you. I want to leave you with that. Risk first, and these markets are random. So I hope that helps you minimize the effects of all this gimmickry. I can't even say the word. I've talked too much. But all these gimmicks that are everywhere, that everyone's pushing on you. Please, all your information that you need is right here on this chart. Okay, all you need to know are the levels, the structure, and then some way to confirm those levels. And you have to let the market give you the answers. The answers are not going to come from a person. All right, people are emotional, and emotion is what drives these prices, nothing else. People, fundamentals, the news, this, that, that expert said this, and blah, 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 blah. The stock to flow model. Nonsense. What drives price is greed and fear, mostly fear. So prices can do whatever they want. They're irrational. So understand that. Don't get mixed up with logic in a random environment. That is what we are always in, and it's always changing. That's why a robot, especially the ones they sell to retail traders, don't work, because but I back tested it. I back tested it over 100 trades. This robot is an 80% win rate. Yeah, right. Until the environment changes, right? And the environment, and it's guaranteed the environment will change. So if you can't change that robot, or that strategy becomes obsolete, then you need to come up with something else, right? It's the same story. That's why it's all a joke. Those are all gimmicks. All right. So anyway, I'm going to leave you with that. I know it may knock the wind out of your hope, the hope that you may have, but that's the reality, and you're better off accepting that and learning how to work. It's not like you can't make money in markets. I'm not saying that either, but you need to understand how much is working against you, and how to adjust and focus your attention on really what matters, and that is risk, not the reward. Everyone wants reward. I want money. I need to make money. I lost half my account. I need to make it back, right? That kind of thing. You need to focus on the risk. And over time, when you're winning more than you lose, that's because of good risk management. That's how you start to get ahead. It's possible, but it requires a lot of patience and some sort of way to filter out your decisions, because we are all emotional, and the emotions will certainly get in the way, okay? I still deal with this, and I've been doing this a very long time, but I understand how to filter them out. I understand, the limitations, and I understand all that stuff. So, hey, not all my trades work out, but I at least take risks that I am comfortable with, okay? And that's it. All right, so I'm going to stop talking now. Otherwise, I'll talk all day. And I know there's people here that are like, it's like midnight or 1:30 in the morning, or 2:30 in a.m. And they're like, man, when's this guy going to stop talking? I need to go to sleep. All right, everyone. So thank you all for spending your time with me here today. Thank you for all your great questions. And join me next time. I try to do this a couple of times a week, right? Mondays, Thursdays. So you can find me there, and all the information that you need you can find on my links and all that stuff. All right. So again, thank you all, and thank you all for the people that sent me those nice coins. It's very generous of you. So everyone, enjoy the rest of the day or the rest of the evening, wherever you are in the world. And thank you very much for watching.